Hi, my name is Michael Barish. I'm the President and CEO of the Barish Group at Rodeo Realty. We are located in Los Angeles, California. I have been a practicing real estate professional in Los Angeles for approximately 14 years, and my California real estate license is 012-32835. This is our first video blog, so welcome to it. The goal of these video blogs is to help the home seller and buyer separate fact from fiction, myth from reality, to educate the home buyer and seller to the realities of the real estate market in Los Angeles, to help explain the effects of the economy on today's real estate market, to help differentiate between different loan programs and government programs that will both help and hurt the home seller and the home buyer as they try to achieve their goal in today's difficult and arduous market. Hopefully, we will change the public's perception of the real estate professional as we go along. So let's get to it. The first myth that I deal with on a daily basis is the availability of the mortgage, or, as most people ask me, Michael, isn't it difficult to get a loan today? The answer to that question is an emphatic no. The other myth I hear all the time is, aren't home prices continuing to go down? Shouldn't I wait? Well, the truth of the matter is, if you're looking to buy a home for $850,000 or less, and it's a nice home in a nice area in today's market, you're going to see multiple offers on that house almost guaranteed, and it's going to sell very, very quickly. There's a reason for that. Some of it has to do with the new loan product, some of it has to do with the new government issues, and some of it has to do with interest rates. But let's talk about the government moratorium on foreclosures for a minute. That effectively has dried up some of our inventory, and the houses that we're seeing on the market now are the nice houses that are fair market sales. As a matter of fact, if the home is attractive, if it's a perceived value, if the buyer walks in and says, I love, love, love this house, it will be gone very quickly. The other reason besides the moratoriums, which is shrinking our inventory, is that we have a historically low interest rate. And add to that we have government programs incentivizing all the first-time buyers with an $8,000 credit from the IRS and a $15,000 credit from the state if it's new construction. All these combined together let the feeding frenzy begin, and it has. In fact, according to the California Association of Realtors, pending home sales have been up for the last 3 months back to back to back. Add to that for the first time in 30 months, according to the same source, we are seeing a rise in the median house price. Combine those together and the public perception of a bottom is here. Subject for another blog is whether we really are at the bottom or not, but we'll deal with that at a later date. Now, it also has to do with the availability of mortgages. The smart buyer understands that money is available and has multiple options on how to address that. The first and most accessible would be 20% down, FICO score north of 720, documented income, and a reasonable debt ratio. Problem is, in Los Angeles, coming up with 20% at our home prices is not always that easy. So, enter in the 10% financing, and that is still available. Yes, there's PMI, private mortgage insurance, and it will raise your payment, but as soon as house values turn around and there is an 80-20 ratio, you can petition to have that PMI removed from your loan, and it's still quite of an effective way to attain your goal. The next issue is FHA financing. That's right, FHA financing. Because here's the thing. FHA financing is the new 100% financing. 3.5% down. 620 FICO score or better. You can borrow the money from a family. You can borrow the money from a friend. It's easy to get FHA financing. And it's not for the person who has poor credit only. It's for the person who might have very good credit. They just don't have a lot of money to put down, or they don't have 20%. So let's look at this for a second. The conforming loan amount in Los Angeles, California is still $417,000. That's at the lowest interest rate available in today's market. However, that being said, there is an elevated conforming of $729,500. That's a raised conforming loan limit, and that's the FHA guideline. So you can go up to $750,000 and only put 3.5% down. Now, there are some challenges for your home buyers going FHA, and you should be aware of them. Number one, you must choose the right lender. It is absolutely critical. Number two, you have to understand that there are some older realtors out there, and I don't mean age-wise, I mean that they've been in the business a long time, and they're a little skeptical of FHA financing because they may not understand the nuances of how well it's changed. So let me give you an example. There are different types of FHA lenders. Any lender can do an FHA loan. The problem is how long does it take to close the deal? And the reason for that is very simple. If the guidelines, what makes the loan obtainable, are done from outside that lender, or if the loan docs are generated from an outside source, or if they're relying on an outside source for funding, it can take them well up to 60 days to close the deal. And, as we said before, multiple offers, you may not have that luxury. So the bottom line is, you need to look for what's called a direct FHA lender. As a matter of fact, that won't even do it. What you really need is a direct FHA endorsed lender, someone who is the same as going straight to the bank. They fund in-house, they do their loan docs in-house, they don't have to look around for different guidelines, and the loan is essentially as easy as any other loan to do. So if you choose the right bank, your FHA financing is really quite simple. The other thing is that you're looking at a situation where if I don't have 20% down, which a lot of people don't when you're talking about house prices up above $750, this is an ideal way to go. There are different things that you should be aware of as a buyer. It has two PMIs, one on the front and one on the back, because the government wants to get their money. The second thing is that you have to be aware of is that, again, when you're competing with multiple offers, how to position yourself that you look as good as Mr. 20% down, that can be a challenge. However, that being said, number one, our house market is on fire. Number two, FHA financing has made a huge dent in the buyer's ability to get a loan. Number three, we know who the players are, we know where the money is. It is available. Number four, interest rates are very low. You may want to take advantage of them now, because nobody has a crystal ball. If you have one, please sell it to me. I could go on for a long time on these two issues alone, but I thought this was a good way to start our blog. If you'd like more information about any of the things that I have said in this blog, please contact me at michael@thebarishgroup.com. That's my email address. Or you can go to our website at www.barishgroup.com. Thank you so much for joining our video blog today. I hope you'll come to our next one, and I'll look for exciting topics and different ways to give you guidance through today's real estate market.